I got something exciting for you. I got the best cloud stock to trade for a breakout in the first quarter of 2021. Now, the cloud computing stocks have been on fire for 2020, but it doesn't look like it's over yet. In fact, someone with some deep pockets just put down $5 million of fresh money, and they think this specific stock, which we'll talk about in just a few seconds, is going to break out to new highs. And if they're wrong in the next 92 days, they lose all of it. So this is another episode of Follow the Money. My name is Joshua Belanger, and let's talk about that specific stock. So we're talking about Workday. This is where we saw this big buying of calls today. And when someone buys calls, they're looking for prices to go higher. We'll talk about that activity here in a second. But if we just take a look here, this stock is, for those that follow technical patterns or pattern trading, you would look at this and you would say, oh, that's a nice little trend here from the bottom here all the way up. It's been following this trend. And then you had some pullback here, which you create this little bit of a pennant. And for those that look at this, and especially off this, they would say this is a bullish pattern. So if that's the way that you trade, that's the thesis that you would also look at as well. But the other thing as well is there money going behind this? Now, there is, and we'll take a look at that. So what they're looking for on the position that we'll talk about here in a second is that they're looking for prices to break out above this 248 level. So it's pulled back here. It's starting to get some legs here. And this is a stock that can get moving pretty quickly here. Let's take a look here at that activity. So the activity was in the March contract. We'll close this up real quick. These don't really matter. And we'll take a look here at the contract that expires in 93 days here. So we take a look here, and you see that March 230 contract right here. That's exactly what we're looking at. Now, they came in early at about anywhere from about $18.30 to about $18.50. And they're coming in here, and you see that the volume here traded at the end of the day, 4,400 contracts. Now, we'll have to see exactly how many stuck. The transactions I'm looking at indicate at least 3,000 will add on here. So I'm looking to have an open interest tomorrow, 3,500. And what that means is that these were opened, and if they traded on the offer, which we can see, then they were most likely being bought. Now, these are big contracts. This is not just some normal trader, retail trader. This is $5 million, and I come up with the $5 million because I took about 2,700 contracts that I confirm and for sure were bought, and they traded about $18.30. That's where I get about the 5 million mark. We'll take a look here at the open interest tomorrow. But again here, we take a look here at 230, prices closed at 230. Now, break even on this is that you add that $18.30, 50 cents to 230. It's going to put you right around 250. So in 93 days, if prices don't get to 250, well, they have to get to 250 just to break even. They have to get above that. So this is a very bullish trade for the next 93 days, and they're not looking for it to go 250 to make their money off of this. They're looking for this to go quickly up to 250, if not exceeding it, and looking for that $18 to go. And if it moves, let's say it moves to $20 here, and we can take a look here and just take a look at the deltas here. So if it moved $20, we would go $20 in the hole here, so 210. So we would be looking at those contracts are worth $30 a contract if it made that quick move within the next few days or maybe a week or two. So that's where you could kind of get an estimate of what the prices would look like if prices were to increase from here. So again, 210 with 93 days to expiration, which is $20 in the money. It's what you'd be looking at for an overall profit potential, or what they would be looking for. But when you put this kind of money down, they're looking to make, they put $5 million down, they're looking to make 10, 15 million. So it's a big directional bet, a big amount of money if they're wrong, because this is not a contractor. This is not something they're going to stop out of. When an institution, when deep pockets put money into the options market, they're going to let it ride. So this is their overall risk, and they're very, very certain, or very confident that prices, especially in Workday, are going to hit 52-week highs and possibly even hit new all-time highs exceeding that, going into 260 a share, to 270. So that's what we have today for Follow the Money, and we'll talk to you in the next episode.